Good morning, listeners, and welcome to the Trade Talk podcast. Today, we'll start with global cues as US markets and US bonds dropped sharply on the CPI reality check. Treasury yield and if we go through with the global macros, then all have turned negative for emerging markets. The bond yield is now at 4.32 from the levels of 4.17. Dollar index is at 104.95 to 105, and Japan's yen is now at 150 plus. So all these factors are certainly not positive, and that will keep the overall upside limited for the market. On Tuesday, after opening little lower, we saw recovery in the market. Most of the private banks did well, as now there is clarity that the rate cut will not come soon. It will take time. For US it will take time, and maybe it will come after June. For our markets, as we discussed, the possibility of coming in the third quarter of FY 24-25. So all these factors are like something which is going to cap the upside, but at the same time it will help private banks to do well in the near term. Most of them have fallen to their extreme levels, so the possibility of fresh buying is more likely if there is any correction in today's date. But the overall setup of the market is still weak because of rise in the bond yield, because of the rise in the dollar index. We may see furthermore selling from FIIs, and that will keep furthermore pressure on the market. Now 21,500, 21,400 going to act as major support for the market. If we see the market is dropping below 21,500, then the chances of hitting 21,450, 400 would turn bright because there is huge amount of put writing. But close to 21,400, the market is having excellent support, and the entire setup of the market is still indicating us that it's a corrective pattern. So close to 21,400, 450, we should look for taking some contra bets in the market with a stop loss at 21,400 on a closing basis. On the higher side, 21,600 and 750 will be resistance. 850 will be the ultimate level, which will attract a lot of short covering, but which is very far from current levels. So broadly today we are going to focus more on 21,400, 450 levels. For the Bank Nifty, there also we saw sharp recovery in yesterday's trading session, but close to 45,500 it got arrested. Today 45,000 and 44,800 will be immediate support zone. Below 44,800 the Bank Nifty can fall to 44,400. Corresponding levels for 21,400 are at 44,000 levels on the Bank Nifty. So in case if we see the Bank Nifty is dropping to 44,000, 44,100, then there certainly we should look for taking some contra bets with a tight stop loss at 44,000 on a closing basis. So these are the important levels on which we are going to focus. And if we just go through with other important major contributors of the markets, then Reliance Industries is still holding above the level of 2900, which is positive. Adani Enterprise is showing some strength. Bank stocks should support the market. So all these important and momentum stocks are still on the upside and having uptrend. So we can expect recovery in these stocks after hitting the important levels. That's all from my side. With this, I am ending today's call. Thank you. Have a great day to all of you.